Salam and greetings to all. In this video, we shall look at the negotiation letter of credit. Negotiation generally, I would say, is the most confusing topic because the negotiability of a negotiation LC is actually not the LC itself, alright, but the bills of exchange, or in banking term, it is called draft. The draft is actually the subject matter that makes a negotiation LC negotiable. So to understand a negotiation LC, we must understand how the negotiability of draft works in the negotiation LC operations. There are actually two things to look at. Number one is the function of a draft. That is how the draft is used to transfer the proceeds from one party to another. And the second one is the availability of the funds under a negotiation LC. So let's take a look at the draft briefly. This is an example of a bills of exchange or draft with all the basic features. The date of issue, the amount in figure, the tenor of the draft. In this example, the draft is payable at sight. The amount in words, the payee. The payee is the person or the party who is entitled to the funds. The drawee, alright, the drawee is the person or the party that is holding the money. The money now is with Tony. This is the person or the party who is owing the payee. In this example, Tony is owing to John. And it is signed or endorsed by John, alright, the drawer of this draft. Now, since the negotiability of a negotiation LC lies on the negotiability of a draft, so let us look at how the negotiation of a draft takes place. Take this draft as an example, alright. Now, to get the money, John must present this draft to Tony. When Tony receives the draft, Tony will arrange with his bank to send a TT or telegraphic transfer to credit John's account. This process will probably take 3 to 5 days, okay, before John can get his money. But what if John needs the cash urgently? What if John needs the cash now? Alright, what option does he have? Well, he can literally exchange it for cash with anybody who is willing to accept it, alright. Now, assuming that Barry is willing to accept it, but Barry would like to negotiate the amount. He would only agree to pay 4,000 to John instead of 5,000. So after negotiating with John, finally John agrees to take 4,000 now, alright, instead of wait for 3 to 5 days to get 5,000 from Tony. So John delivers the draft to Barry, and Barry gives to John $4,000 in advance as agreed. So when John delivered the draft to Barry and accepted 4,000 as the value for his draft, legally speaking, John has transferred his right to funds to Barry. The draft has been negotiated or purchased by Barry. And the negotiation is complete when the draft is transferred to Barry and endorsed by Barry on the back of the draft. So Barry now is the holder in lieu cause, who has the right to the draft. That means Barry is the rightful owner to the funds, $5,000, the actual value of the draft. And Tony now is liable to pay to Barry instead of John. When Tony receives the draft from Barry, which is drawn on himself, he has to honor it and pay to Barry the amount of 5,000. So what we can see here is that the negotiability of a draft is actually facilitating the funds from one party to another, that is from John to Barry. Originally, Tony was liable to John a sum of 5,000. But when the draft is negotiated to another party, Tony now is liable to another party, that is Barry. So this is basically how the negotiation of a draft takes place. The same principle applies to negotiation LC because it uses a draft as a means of negotiation. In the context of letter of credit, alright, negotiation is specifically defined in Article 2 of UCP 600 as the purchase, alright, the purchase by the nominated bank of draft drawn on a bank other than the nominated bank and or documents under a complying presentation by advancing or agreeing to advance funds to the beneficiary on or before the banking day on which reimbursement is due to the nominated bank. This article mentions few important elements of negotiation like purchase, nominated bank, draft, advance funds and reimbursement. So let's break it down, this definition into smaller pieces so that we can digest much easier. What this article is trying to say is that it tells us what is negotiation. What is it? Okay. In a simple and plain language, negotiation is the purchase. The article also tells us who is purchasing. It is the nominated bank. And the article clarifies what is the nominated bank purchasing. It is a draft, alright? A draft which is not drawn on itself. A draft not drawn on the nominated bank. In other words, the nominated bank is purchasing a draft which does not belong to it. And the purchase is deemed completed, or the purchase is fulfilled when the nominated bank has given an advance to the seller. That means when the nominated bank purchase a draft, okay, together with the documents from the seller must receive funds in advance from the nominated bank. So we can say that negotiation is when the nominated bank purchased a draft which is not drawn on itself and has given funds in advance, or has committed to advance funds to the seller. This is what a negotiation is in the context of negotiation letter of credit, basically. Now, let's see how the negotiation LC operates. When the issuing bank issues a negotiation LC to a seller, okay, the issuing bank will appoint the nominated bank. It can be a specific bank, okay, or it can be any bank. This is the example of a negotiation LC. The nominated bank can either be specifically stated like in example 1 here, or it can be stated as any bank like in example 2. In this example, a draft is required to be drawn at site. The draft is required to be drawn on the drawee bank, alright? The drawee bank is the issuing bank, okay? What this piece of paper of this or this LC is trying to say is that the seller can obtain the payment directly from the issuing bank, okay? Now, to get the payment, what the seller must do is to draw or to issue a side draft on the issuing bank and present the draft and documents to the issuing bank. This is what the LC is saying, because the issuing bank is the bank that is holding the funds for payment, and it is also the bank that issues the irrevocable and definite undertaking to pay. So once the seller has drawn a draft on the issuing bank, and the seller can present it together with the complying documents to the issuing bank. When the issuing bank receives the draft and documents, the issuing bank will pay the seller. All right. This is the basis of how an LC works. However, if the seller needs the funds urgently, the seller can obtain funds in advance from the nominated bank. That is to request the nominated bank to negotiate the draft which is drawn on the issuing bank together with the documents. When the nominated bank agrees to negotiate, the seller will present the draft and documents to the nominated bank. The nominated bank will use its own funds to purchase the draft and documents and give the funds in advance to the seller. When the seller has obtained the funds in advance from the nominated bank, okay, legally speaking, the seller has obtained the value for his draft. The seller has transferred his right to the draft to the nominated bank. The nominated bank now is the holder in due course of the draft, and the issuing bank is liable to pay or reimburse the nominated bank for the draft amount. The draft and document then will be presented to the issuing bank. When the issuing bank receives the draft and the complying documents, the issuing bank will arrange to transfer the funds and pay the nominated bank through a reimbursing bank. So this is the function of a draft in a negotiation LC. And this is also how the negotiability of a draft works in a negotiation LC, and how it makes a negotiation LC negotiable.